The Canadian real estate market is currently trading at a 14-year low in number of homes sold in January of 2023. According to the Canadian Real Estate Association on their monthly CREA stats report, which can be found just by Googling CREA stats, CREA, Canadian Real Estate Association, they released a couple of highlights from their national statistics, which is basically an aggregation of data across all the different real estate boards across the country. And I actually take this data and work as a data journalist and break it down for Real Estate Magazine, which is a big magazine that is consumed mostly by professionals in the real estate and mortgage industry. So the highlights from this report are that national home sales declined 3% month over month in January. January and December are typically the two slowest months of the year, and so it is kind of hard to rely on them from a data point perspective, but the reality is that we just went through two incredibly slow months, very uncharacteristically slow months for Canadian real estate, and this is really putting a lot of pressure on the profession, who is now seeing their income decline, and realtors are really feeling the pressure of a slow market. The actual not seasonally adjusted monthly activity in the real estate market came in at 37.1% below January of 2022. Now, January of 2022 was an exceptionally hot real estate market, and so a lot of people are saying, oh, is this drop really reflective of the truth? And it's really hard to say because, and we likely won't have a true story of what's going on in the Canadian real estate market until the spring market takes place, which is usually in the end of Q1, beginning of Q2. The number of newly listed properties rose 3.3% month over month. So, you're hearing a lot from professionals in my industry talking about how supply scarcity or low inventory has been causing bidding wars to start again in the Toronto real estate market, and even prices to begin accelerating in some markets. We're seeing that on the East Coast even. And a lot of people are asking the question: is the bottom in yet for the Canadian real estate market? And to be honest, nobody knows, especially me. And those who tell you they do, they either have some sort of guru magic that I don't, or data points that I don't. But the reality is we know that the top is gone. And the top is almost, the market started peaking in Q1 of 2022. So prices are now down. They're continuing to moving down on a month over month basis. They're down 1.9% since last month, and they're down 12.6% year over year. And that's using the HPI, or House Price Index, which is sort of a lenient metric that the Canadian Real Estate Association uses to analyze what's happened with price. What this tells us is that you're moving further away from the top, so there's less downside risk below you because you're getting closer to the bottom, and there's more upside potential above you. And so it's easier to make a less risky investment on the way down than it is on the way up, because you don't ever know how much upside potential is above you, but you always know how much downside risk is below you. So when I analyzed this information for Real Estate Magazine, we went through a couple of different pieces. So this is one of the key takeaways, if you look at chart A on the CREA Stats website, is monthly home sales. And I've referenced this chart a number of times on this YouTube channel, but I'd like to go back to it because I've said for a long time that we're going to see this sustained period of low sales volume. The Canadian real estate market tends to react to financial hardship and stress and uncertainty by pausing purchase decisions, and we're seeing very much the same thing, pausing sales decisions. So inventory is slow and the number of sales is slow as well. And you can see that red line of monthly home sales continuing its trajectory down below the 10-year monthly moving average. And if you look back to a year like 2009, we saw the same thing happen, where we were in a recession and people didn't know how to respond, and so they just paused their decisions. Fortunately for this profession, in the fullness of time, once you get through that sustained period of decline, you will see or what we've seen historically is a big rebound in activity, and it trades above the 10-year average. And it seems like my industry is really rushing to say, the bottom's in and we're going to get back to that. And nobody knows when that'll take place, but it will likely take place if historic cycles are to be believed. And that happens as a result of affordability correcting and eventually interest rates likely being brought down to help the economy recover out of recession. Talking about volume, you're starting to see a correlation between price and volume, and it's becoming exceptionally clear when you look at how prices evolved during those same periods, 2009, or the drop from March 2008 to 2009, which was just over 8%, or February 1989. So if you look at the past three drops in house prices in Canada, 1989, 2008, and 2017, we now have surpassed that price decline from February, with the drop from February of 2022. So this means that we are looking at a worse correction in the housing market than we've seen historically in Canada since at least the 90s. The question becomes, is the worst behind us? And if you look at past housing cycles, 1989 being a good example, price usually drops in a pretty steep fashion, and it tends to grind down slowly over a long period of time. And over a 2-year period, that would look like a flat line, but it is down. It just doesn't look down as much because of that big drop off. CREA also makes note in this report, which they haven't really mentioned much before, but that a lot of this data is skewed by markets like Toronto and Vancouver. Toronto and Vancouver both, and their greater areas, and most of Ontario and most of BC have seen drops in price, whereas most of the other parts of Canada haven't seen severe drops in price, and some areas are even up year over year. So much of the East Coast is still up year over year, and Calgary, being one of the outliers in the prairies, is still up year over year. Most other prairie cities, Edmonton, and Winnipeg are down, and Saskatchewan is relatively unchanged. And so what this tells us is that markets with higher prices, with lower affordability, with higher dependence on credit, dropped faster and harder because the interest rates went up, the cost of that credit went up, and this creates challenges for owners of property and real estate investors. There seems to be a lot of pressure. Finally, I'm just going to get to the supply and demand piece, and then we'll wrap up here. So from the Real Estate Magazine article that I wrote, there seems to be a lot of pressure on 2023's spring market to perform, to help floor the housing market. Real estate professionals are really hoping that it's going to breathe new life into this industry and stop prices from declining and start producing income for real estate agents who have now been facing low volume for the past 4 to 5 months. And we're hearing a lot of anecdotes of the industry heating up and the market, and who knows, maybe it's just agents kind of creating this FOMO machine, which seems to be what a lot of professionals are accused of in this industry, and I won't disagree with it for the most part. But it really, it doesn't show up in the data. We've seen, we just saw TREB's real estate market report that we've had one of the slowest Januaries on record, and we're seeing Canadian Real Estate Association's report that we're seeing January being one of the slowest, the single slowest January in 14 years. The saving grace is that the supply side is low as well. So we're not seeing a lot of demand, but as we're hearing, and I can verify it, supply is up just 3.3%. So we're seeing this trickling in inventory, and that's kind of kept the market away from a state of excess supply, which has kind of aided in slowing further price declines in many of the markets in Canada. So that's my summary on sort of what's happening in the Canadian real estate market right now. If you are interested in learning more, working with me, having me help you advise you on investment decisions, I do host a podcast called the Canadian Real Estate Investor Podcast. And I also host regular Twitter Spaces Thursday nights at 8 p.m. Eastern Standard Time, and I'd be happy to have any discussions with you about what's going on in the real estate market in Canada. So I basically just covered the entire article, but if you are more of a visual learner or prefer to read the statistics, I will link the CREA Stats and Real Estate Magazine articles in the description below. I'd really appreciate it if you took a look, and feel free to leave a comment on this video or on the article on realestatemagasine.ca. Always appreciate feedback and an open, transparent discussion about what's going on in the Canadian real estate market, and really want to get an understanding for the questions that you might have about what this all means for buyers, for owners of property, for lenders, or for real estate investors, because those are the individuals that I try and represent as clients on a regular basis. So I'd love to hear from you, and I appreciate you giving me your time and attention for a couple of minutes here, and I'd love to continue the chat.